Hi, folks. Good morning, afternoon, evening, wherever you may be. We've just opened up the webinar. We're going to be getting started here in probably a minute or so, allowing some time for some more participants to filter in. But I'm Andrew Chen from RMI. Very pleased to be your host today. And again, we'll just give ourselves a minute or two to allow our participants to add up here. If you're just joining, folks, we're just going to get started in a minute here. We're allowing our participant list to get up to probably going to get close to 200 here or just before, and we'll get started. But thanks again for joining. All right. Well, we're just rolling up to about 150 participants here, which is fantastic. I expect we'll get a few more folks trickling in. But why don't we go ahead and get kicked off here again, or for those who haven't heard the intro, my name's Andrew Chen. I'm a principal at RMI and our Climate Aligned Industries team. I'm very honored to be host and moderator today for our webinar. Very much looking forward to hearing from some fantastic speakers and getting some key insights on the SAF market and hearing some results from SABA's multi-year RFP, which we'll get into here in just a few minutes. As just a few points of housekeeping and as a welcome also, just wanted to highlight that we will be recording today's call. We're already recording, and we will be distributing the recording to all participants that registered after we wrap up here today. We're operating, as you can see, under the webinar format. So that means that we'd love to have some questions that we can share and toss over to our participants and speakers here today. Please use that Q&A function. We'll be monitoring that throughout and trying to filter out and highlight some of the key questions to our speakers today. But again, huge thanks to all of our speakers. We've got a fantastic set of panelists today, as well as all of our participants on the call. Thank you for taking some time to hear more about how we're driving scale and sustainability in the SAF market. Why don't we, just as a little intro here, we've got a number of fantastic speakers from Neoteric, from Watershed, from World Energy, from Novo Nordisk, 12, and Alaska Air. I promise to get on quickly to hearing from those presenters because I definitely want to make sure we get as much time as possible to hear from them on some key and really important themes. We're going to be hearing a bit about the power of demand aggregation, the importance of long-term contracts, and progress that's being made on advanced fuel technologies in the SAF market space. But before I do that, maybe a quick reminder on what is SABA, the Sustainable Aviation Buyers Alliance. So SABA is a partnership between RMI and EDF with expert support from Neoteric, who help to operate our secretariat and lead our day-to-day operations. Um, we are we're established to accelerate the arrival of net zero aviation and investment in high integrity SAF. And we do that with three key objectives in mind. One is on expanding the SAF investment opportunity. Another is on providing education and policy support to our members and to our customers. And the third area is around accelerating technology and innovation. And I think we'll probably highlight on all three of these objectives today. But as a quick reminder, I think that first one, expanding the SAF investment opportunity, is a really key one that we've been focused on for the last 2.5 years or so. These include things like establishing the framework for what is a SAF certificate and how does it work. So within the context of SABA, that includes some key resources like a sustainability framework, where we've helped to define what counts and what do we consider as sustainable feedstocks and fuel types for our SABA transactions and our customers, including this RFP that we're talking about today. It also includes some help on guidance on accounting and reporting of our carbon and carbon savings that come from SAF and SAF certificates. It also includes collaboration and engagement with the SAF certificate registry, which is a recently launched SAFc registry that is blockchain-based and web-based, where we've developed a system and a framework to help provide the level of rigorous and transparent tracking and traceability of SAF certificates across the value chain, and something that we're really excited to be continuing to grow here today. As again, a brief run through of our agenda today, we'll hear from two different speakers on each of the three topics. Again, demand aggregation, long-term contracts, and progress being made on advanced fuel technologies. And within that, we do have some additional buffer time to go through some questions. So please, as a reminder, and if you just joined, please use that Q&A function in the webinar. We'll be monitoring that, and we will make sure that to pass along some high priority or critical questions to our speakers today. And as I believe as our first speaker I'm handing over today, I'd like to introduce Andre DeFontaine from Neoteric. Andre works within the SABA Secretariat and was the orchestrator and mastermind behind our latest RFP, as well as our first spot RFP that we ran as a pilot a few years ago. So Andre, really, really excited to have you here today. Hoping you can help provide us a little bit of the high level results and share some of the perspective on what we learned about demand aggregation today.
Absolutely. Thank you, Andrew, so much. I'm humbled and a little bit distressed that you referred to me as a mastermind, but I think that's the first time that's happened in my life, but I'll do my best not to let people down here. So thanks everybody for joining the call today. And I'm really pleased to share the results. Of course, we released this a couple of weeks ago, but the RFP that we ran just recently for SABA, I think yielded some really great results. We had collectively a couple $100 million of investment from corporate customers into the SAF market, which is equal to about 50 million gallons of high integrity SAF. So I think some really nice high level numbers. One of the things that I really liked about this deal is the number of participants that were involved. So 20 corporate customers, 4 fuel providers, and 3 major airlines all came together. Very nice collaboration, a lot of flexibility and patience that was shown by all the participants. So our gratitude goes out to all of them. I think getting these people together was really crucial, several of whom had never bought or sold SAF certificates in this way before, which we think is really important because as an organization, one of the things that we're trying to do is lower the barriers to entry and get more players involved in this market because we see that as key to scaling the industry. So, a couple of observations in terms of what we saw through this process. But before doing so, I think important to first sort of remind ourselves why we think demand aggregation is such an important lever as we seek to decarbonize the aviation sector. Number one, a larger demand signal obviously sends greater confidence to the market. So when we're able to pool demand, we can send that stronger demand signal. And what it shows is to fuel producers that if they scale production, there are customers on the other side that are willing to purchase their product and make the investment. We are also, when we're able to pool demand, we put ourselves in a better position to negotiate better terms for our customers. And we did see some of this through the most recent RFP in terms of some concessions on price, as well as additional flexibility on things like term length, which was really quite helpful. And then one of the things that we hear a lot from the companies that we work with that purchase through the SABA platform is that they enjoy doing this as part of a collaborative. There is a lot of risk when you venture out into new markets on your own. And so there's a benefit from doing this together with other like-minded companies so you can learn from one another's experience, especially when it's facilitated and managed by an expert third partner like we have through SABA. And then one other thing that I would note, I think this ties back to some of the points that Andrew made, is that demand aggregation is a kind of represents a convergence of a lot of the work streams that we've been pushing forward on through SABA over the last few years. So the fuel that we're investing in meets the sustainability criteria that we drafted for this purpose. The attributes are flowing through the registry that we developed together. And then ultimately the attributes are being accounted for by the customers in a manner consistent with the guidance that we developed in collaboration with a number of other partners. So it's a really nice tying together of a lot of important work streams that have taken place over the last few years. So a couple of takeaways from my perspective as we look back on this deal. I think one key issue is that while the deal was big and important, it really could have been so much bigger. We were unable to meet the full demand from our members in the first couple of years of the RFP. Ultimately, I think we were only really able to purchase about half of what was requested. So I think there's a clear message here for fuel producers that the customers are there, the market is there, the demand is there. We really need to see production scale to meet the needs of customers that are seeking to purchase this product. I think another point is that while we've made a huge amount of progress in terms of the design of the book and claim system, there's still not total consensus on some key elements of book and claim. We're still getting questions on things like additionality or what registry to use or what certifications are really needed at what point in the value chain. So these are solvable questions, but it takes a lot of time to work through them. And that introduces friction, delays, and in extreme cases, it causes some folks to actually sit out of these transactions, which of course we don't want. And then related to the uncertainty, of course, this has been top of mind for many over the last few weeks, that there's still a lack of clarity around the extent to which these certificates will count towards corporate climate goals. And I think many of us see this moving in the right direction, but absent total certainty on that question, I think we're still going to see artificial limits on corporate demand, especially for the long-term contracts that we know are so important. So still some work to do. I think the good news is that these are resolvable issues. And my hope is that, in a couple of years' time, we'll look back on this deal as being very historic, but ultimately quite small relative to what we can accomplish together. So with that, what I'd like to do is pass it over to Claire Keeley from Watershed, who's going to talk about the experience that Watershed had and motivations for participating in the SABA RFP. So Claire, over to you.
Fantastic. Thank you, Andre. It's great to meet everybody. I'm Claire Kiley and I work at Watershed and led this partnership and our work with SABA. Watershed is an enterprise sustainability platform. We help companies like Airbnb, Carlyle Group, Everlane, Yeti, or BBVA manage their climate and ESG data, measure and report their emissions, and ultimately take action. And we give companies tools that they need to scale up their level of climate programs. One of these tools is our marketplace, which features more than 45 partners offering high integrity carbon removal, virtual power purchase agreements, and for the first time, which we are very excited about, Sustainable Aviation Fuel certificates through our first of a kind partnership with SABA. So what does that look like? So Watershed is both a member and an aggregator partner of SABA, meaning we aggregate demand from our customers to purchase SAFc through the Buyers Alliance. So like SABA, we are huge believers that economy-wide decarbonization can accelerate when corporate climate leaders work together. And that's the ultimate ethos behind this partnership and our participation in SABA, because the actions that one company takes can have a ripple effect on its partners, its customers, its supply chain. And with more companies participating in this climate economy every day, connecting all those actions together has become more important and more impactful. And so Watershed and SABA share this vision, as that Andre highlighted, of getting SAFc into the hands of every company that has aviation emissions in their value chain and sending that really strong signal that we really need. So we are helping do that by accelerating and growing the potential pool of customers for SAFc by giving our customers the option to participate in SABA and purchase SAFc itself. So we aim to expand the demand for SAF exponentially, helping grow the market and building the sector as quickly as possible to help decarbonize a key part of Scope 3 emissions. So why is this all important? What do we see? Well, as a company that helps our customers with the carbon accounting and reporting pieces as well, we've seen a growing number of companies taking action towards climate goals and setting science-based targets and making sustainability and net zero commitments. The vast majority of these targets include a Scope 3 component. And so for companies, the aviation sector emissions associated with their, let's say, business travel or freight transport are a really important contributor of their total Scope 3 emissions inventory. But unfortunately, at the same time, it's hard to have an impact, or it's hard to have agency to impact that without disruptive changes. Stopping essential in-person meetings, corporate events, or product distribution just like isn't possible. And so that's why we see SAF certificates as being so powerful, because even without direct control over airlines or air freight, corporations have the impact on decarbonizing aviation and to take action to reduce their own emissions. It's compelling because they're not only taking action, they're making a brand building investment by associating with the fantastic SABA Association and buying the SAFCs themselves. And what's really exciting is in these conversations with customers right now, I'm also seeing companies kickstart initiatives in their supply chains and thinking about how they might request that their own suppliers actually start procuring SAFc for their own emissions too. So we're starting to see this multiplicative impact that I highlighted at the start. As Andre highlighted, the accounting treatment of this is very important as well. So we recommend that our customers follow the World Economic Forum, PwC, Clean Skies First Tomorrow, and SABA guidance around the dual reporting, around one inventory without SAFc for disclosures and target setting, and one including the benefits for tracking and sustainability reports. Because fundamentally, the use of SAFc is going to result in increased market demand for SAF. So we believe it's important for companies to account for these and catalyze these abatements when they talk about their programs publicly. So in conclusion, and happy to take more questions, this is kind of the next phase in our mission to help companies across different sectors, different geographies, and different scales all up-level their climate ambition. And we're really excited to lead the way alongside SABA for expanded book and claim use in Scope 3 for things like SAF. So thank you very much, Andre.
Thank you, Claire, and thank you, Andre. Claire, while you're still spotlit here on the panel, love to just hear a little bit more about your experience with some other procurements and how the purchase or procurement here of SAF certificates compares to or departs from similar exercises you've done in other markets for carbon credits or certificates in general.
Yeah,
can you comment on that?
Absolutely, it's a great question. So we have this ethos of how do we democratize access to really high impact, high quality climate solutions that might not be accessible to the likes of all the corporations of the world. So how do we as Watershed take a stance to help them stand behind the fantastic logos we have on the screen, like the Metas, like the BCGs, like the Netflix, et cetera, in order to tap into that action? So we are members of Frontier, the Permanent Carbon Removal Advanced Market Commitment, which has a very similar ethos, and we see the power and the demand aggregation there across all the themes that Andre highlighted in terms of the negotiation terms, pricing, contract offtake durations, the value of the diligence process and kind of going at it together with a big group of companies. And then in addition, just the power that sends when you're able to put up the price tags, the number of gallons, the amount of carbon removed, whatever the metrics might be in the volumes that you shared on the slides 2 times ago. So I think it's really important, not only in terms of the signal that it sends to do it as a group, but also because we're doing it in a way that we're helping enable other customers to kind of join into that fight, which maybe they wouldn't have had the expertise to previously, whether it's going out and diligencing all of these very detailed, important, but detailed and complex climate solutions that they might just not have that ability to do in-house. And so we've done that across in clean power as well, across virtual power purchase agreements around aggregating demand too. So we are huge believers in this ethos. It was why I personally was drawn to SABA back last year when we started participating in this RFP, and are excited to bring this spirit to many other elements of decarbonization. And I think specifically in scope 3 and book and claim and green commodities, where there's a still somewhat amorphous treatment around the accounting and reporting side, and how can we bring that lens of expertise that we have there as well.
Thanks, Claire. I really appreciate that, and very, very excited about the partnership we have between Watershed and SABA. I think a great template and opportunity to help scale the investment opportunity here, and as we've been talking about, empower our consumers here to really be able to access and do so with the right level of education and facility, and acknowledging that many of our folks who are purchasing are not going to be experts in procuring SAF, and therefore that ability to do some diligence for them is I think incredibly helpful and important here. Andre, I wanted to come to you next, or back over to you. We've seen a few questions in the Q&A on contract structure, pricing, who was involved. Maybe could you just give us a little more detail, more generally, on the role that SABA plays in the contracting process, who's typically involved, and any insights you can play on the pricing questions as well?
Absolutely, Andrew. Thanks for that, and thanks for the question. I think the question around pricing actually kind of surfaces a couple of pretty interesting dynamics that we experienced through this process. So the customers did agree on a price, or I should say prices. And the reason why I say that is because we did select multiple winners of this RFP process. So there are multiple suppliers of the SAF certificate. In many respects, process-wise, it would have been simpler to have aligned on a single provider, or at least a smaller group of providers. But if you go back to what I said earlier about our total demand really outstripping available supplies, that was especially true if we had tried to rely on a single entity to meet the full demand. So we had to spread ourselves out and purchase from a number of different airlines and fuel providers. And each of them came with a different price. And so one of the things that we've seen in the market is that there's actually still a great deal of variation in the price of SAF, even for fuel that on the surface looks very, very similar. Same feedstocks, same conversion process, but different prices. And that can be driven by the availability of incentives in certain regions, and then some reasons that we don't totally understand quite yet. So there was a range of prices that made things a little bit difficult. Ultimately, SABA's role in this process is to facilitate the contracting. So we aggregate the demand, we go to market with an RFP, but when it's time to do the contract, that's conducted by individual buyers and the suppliers. So we provide a lot of support through that process, but the final signatures on those contracts, those are bilateral deals between the entities that are participating directly in the deal. SABA is not set up in a way that it can go out there and purchase on behalf of the customers and then distribute the certificates onwards.
Okay, thank you. Thanks so much, Andre. I appreciate that. And I think one of the major things here in terms of this RFP is its multi-year structure, which is quite interesting, and an evolution from our first pilot RFP, where we were really more looking at a 1 to 2 year spot purchase to test the market. And we've learned a lot from this longer term approach. Would love to get into that in a little bit more detail. So I'm going to go ahead and welcome Adam Klauber from World Energy. Adam is a former colleague and close associate and friend here. We've been working with you on our first RFP as well as this one. Very much appreciate your insights today. Adam is Vice President of Sustainability and Digital Supply Chain at World Energy. Would Adam, I would love to kick over to you to hear a little bit more about the importance of these multi-year contracts and driving scale and supply, and what they do for you as a producer.
Thank you very much, Andrew, and it's great to be here. So long-term to us is a key priority. So we need to prove to our investors that there's durable demand, and we've made a choice, a strategic decision as a business to focus on sustainable aviation fuel and the aviation sector. So that means that we've made more investments in maximizing our SAF production yield. And we can only do that with the voluntary market, with SABA customers who are willing to sign on, and ideally willing to sign on for multi-year agreements, like 5 years or potentially more. So Andre had mentioned the ever-present challenge of convincing some of the NGO greenhouse gas experts that a credit like SAF certificates are truly additional. And we believe that part of unlocking the acceptance of this approach of book and claim is connecting to the long-term agreements, that we think that additionality can be proven by a party who is signing on for multiple years, because that is what's going to help us to scale this industry. So that's, we think, is really key. We also want to note that the voluntary market is a major force potentially for decarbonizing aviation. So we've seen these are 50 million gallons. For context, this is more on a yearly basis than any US airline purchased in 2023. So no US airline purchased as much as 10 million gallons. So we can already see that the voluntary market here can have a significant benefit with accelerating demand. And these long-term commitments then support our ability to convince banks and investors to put more money on the table so we can build our next production plant, which is what we're putting in for Houston. So I wanted to talk a little bit more about then this long-term contract and how it can translate into new facilities. And what we see is that the offtakes and agreements are key, and we need bankable signals. And that includes the binding agreement, first of all. Secondly, the longer term commitment, like SABA is supporting here, and then some form of risk management for pricing variability. So on that first point of commitments, many of the press releases that you've seen are likely no more than MOUs, memorandums of understanding. There are probably exit clauses if the price exceeds a certain fixed limit, and also if there are changes in the regulatory roadmap where potentially government subsidy decreases. So we think that a binding commitment like those in SABA are critical because they prove that offtakes are real. And so this is a really important distinction with the SABA contracts. For duration, the longer term commitments also help us to make investment decisions where it takes us 5 or more years to build a new plant. So if we can show that a significant portion of the volume of that plant is taken, then we can convince the banks to provide us money and potentially provide us capital at lower interest rates. And the reason why that's important is because ultimately the capital costs are borne by our customers. So if we can reduce the interest rates, we can in effect sell our volumes for less. So this is really important. And the more long-term agreements we have, the more production facilities we can build. And then on this third point of pricing risk, I think there's an important reality in aviation, as in many hard-to-abate sectors, and that's the potential Scope 1 parties. The airlines have a limited ability to shoulder the burden entirely themselves. So Scope 3 customers can unlock decarbonization at scale because they have different potential credit ratings, they have different balance sheets, they have a greater ability to pay and potentially better margins. So we know the airline industry on average earns about a 3% profit margin. That means they have limited ability to cover a price premium that may be over 20% of their operating costs to cover SAF. So if there's a way for Scope 3 parties to cover this price premium, this can unlock new demand, and this can help convince the banks and investors that there really is a demand signal. So we appreciate that SABA makes this possible, and then also allows for variable pricing potentially with our customers that can cover some of the market forces that make it challenging to offer a fixed price. So we at World Energy need long-term contracts. This is what's going to help us grow and ultimately will support growth in the sector. Ultimately, we would like to see a certification around contracts that know that they're both long-term binding and have a way to manage price risk. Thank you, SABA, for your contribution in advancing decarbonization for aviation.
Thanks, Adam. Thanks very much, and definitely appreciate some insight. I'm definitely going to be coming back to you with some questions here, but wanted to hear from another SABA customer. So I'd like to introduce Dorothy Nielsen from Novo Nordisk. Dorothy is the VP for Corporate Environmental Strategy. And we've been talking a little bit about the duration of contracts here and the benefit that it provides, especially for the producer on the financing side and the commercial side of things. But Dorothy, on the customer side of things, how important are these longer term contracts for a group like Novo Nordisk and meeting your long-term strategies?
Yeah, thanks a lot, Andrew, and hello everyone, and thanks for inviting us into this panel. So maybe just a few lines on Novo Nordisk. So we are a healthcare provider, pharmaceutical company. We are a global company and produce nearly half of the world's insulin. And recently we have also joined into the obesity market. So we are truly a global company. We have production sites globally, and also our customer base is global. And of course, that is why we depend a lot on that we can move products and people around, of course, to a cost that is that is low, but also in terms of reaching some of our sustainability targets. And to come back to our sustainability targets, then we have a net zero target in 2045, which is of course a couple of years from now. But even more importantly, then we have set ourselves net zero CO2 emissions in 2030 from our operation and transportation. So of course that is our scope 1 and 2, and part of our scope 3, namely the transportation. So that is why that suddenly you can say the whole aviation and sustainable aviation fuel becomes important for us, because we have set ourselves quite an ambitious target. First of all, what we try to do is actually not to use sustainable aviation fuel, meaning using other modes of transportation that could be trucks, ships, and so on. But eventually we do need to fly. And we entered the SAF market a couple of years ago, actually, to try to live up to our ambitions. And that was quite a challenge. Not a lot of providers of sustainable aviation fuel, and also the whole book and claim system were not developed. So it was, maybe to be honest, not a nightmare, but it was very difficult for us to navigate in this field. So when we kind of then came about to talk with SABA, where we collectively both have the supply part, we have can get the help and inspiration on the book and claim, the whole reporting part, and also that we as corporate could really send a strong demand signal that we were willing to invest in longer term contracts, making it possible for fuel providers to also make the investment. That was where at least we kind of felt that things were finally happening, and at a larger pace than we have seen before. So having a long-term contract is important for us, simply because we have the targets and we need a supplier that we can count on, also in a market that currently is scarce, at least from our point of view. Hopefully that will also lead to a lower price. We have for many years had the philosophy that we are willing to invest in new areas, new technology, in order to mature them. But we then also expect and would like to see that over the years that price will come down, and that will also be then be available for other customers that may not share the same kind of view. So that has been kind of some of the key points for us entering into the SAF SAF market, and of course being part of a larger network, a partnership is key in that perspective.
Thank you, Dorothy. And I'd love to, I think anytime we hear from a SABA customer, I always love to hear a little bit about the journey that you've been on to get to the decision point that you've been able to get to. Is there anything you can share or speak about in terms of the process you went through and kind of how you got that internal buy-in and sign off on this investment and hopefully future ones as well?
Yeah. So of course it all started out with the target that we have. So we have promised, you can say, ourselves and our stakeholders, our shareholders, that by 2030 we will have zero CO2 emissions from operations and transportation. So setting ourselves a target is of course the key points in in also making sure that we then deliver on it. Sorry. And then of course you can say how to then go about it. I'm in place in a corporate function. I lead the sustainability work, but I very much depend on my sourcing colleagues. So they are actually the ones that go out and scout. So what is possible? What do we have? And we have actually started out by making a one-to-one agreement with one sustainable aviation fuel supplier. That took a lot of time, both from our side to figure out, is this a sustainable solution? Do we believe in it? But also from a sourcing perspective. But having a cross-functional team working on it, so being us on the sustainability side and then on the whole sourcing side, and then of course have a management team that really believes in, and if we want to drive innovation, if we want to drive this, then it comes with an initial investment. And luckily, you can say we have a management team that believes in that philosophy, but also with the aim of that the price will get lower. And we have a similar experience when we entered into the renewable energy markets. We saw exactly the same happen. We paid a premium in the beginning in order to really burst the development, and now we see more or less those prices are on par. So I think we built on some good some good habits, you can say, from the renewable energy market.
Thank you so much. Yeah, really interesting to hear that, and I definitely commend the leadership and ambition that Novo Nordisk has shown here. I would love to pass back over to Adam. I think we've had a few questions in the Q&A, and generally on more of the supply side of the equation here. So Adam, I guess the first question I'd love to hear from you is more on the market in general. What, our first pilot RFP, we saw a lot more demand, voluntary demand from corporate consumers than the market could supply. We still feel like we've met some pinch points. It feels like there's probably more voluntary demand than ability to meet that today. How do you see that changing over time? Do you think corporate demand is always going to outstrip production levels? Are we going to meet an inflection point? When would that be, do you think?
Yeah, I think we're in early days with proving this model that SABA has helped show people can work. So I think it will probably take us a number of years before people make the investment decisions to build new plants beyond what government mandates potentially could require. So I think we may be facing this dynamic for the next, say, 5 to 7 years, where it will be a seller's market. There'll be a constrained supply. But I think as there's growing momentum and trust in the booking claim system, that this is something that can be relied on, and that all the parties, including the environmental NGOs that manage greenhouse gas accounting, embrace this approach, and this is true mitigation. I think that this could help provide the confidence for entrepreneurs on the production side to make those decisions and unlock more supply. But I foresee that we still have a long way to go. We're still in early days with this.
And Adam, while I've still got you here, just trying to get a little bit more specific on logistics. Where are these molecules being produced? Where are they being delivered? What are the kind of timescales that you're working on in terms of actual delivery and production versus generation of these certificates and things that come with them?
Yeah, thanks, Andrew. So our plant is in Southern California in a city called Paramount. adjacent to Los Angeles. We generally try to deliver the shortest distance, and we're building a pipeline. For the next 18 months or so, we'll be reliant on our truck deliveries. So we blend volumes that have been produced at a facility. We have waste oils that come in by rail, and within 3 weeks or so, we've got production-ready jet fuel or sustainable aviation fuel that meets the jet fuel specs that can go out. It gets blended on site, and then it goes to trucks either to a terminal that delivers to Los Angeles World Airports, which is less than 20 miles away, or regional airports as much as 50 miles away, including Ontario and Burbank. So for the most part, our molecules stay relatively local. They're within the region, and that reduces the transport costs and the logistics associated, as well as the emissions. So those are all good things. We can minimize the delivery overhead and focus on producing. And then in turn, we pass all the savings to our customers who are buying molecules from anywhere in the world.
Great, thanks, Adam. Helpful to get a little bit of a physical picture as well of this this virtual indirect procurement mechanism that we're all participating in here today. So thanks for that. I'm going to switch our theme a little bit into the more advanced technologies that we're looking at, and one of the key objectives that we've talked about is SABA, of helping to advance those future technologies and future fuel pathways. And so wanted to hear a little bit more about e-fuels, and I will invite our friend and partner Ashwin Jadhav from 12, who is the VP of Business Development. Ashwin, could you just help us understand a little bit more of the properties and advantages of e-fuels, or so-called PTL fuels, and progress being made in this technology, this important technology?
Sure, Andrew. First of all, thanks for having me. I'm so glad to be here. So I'm Ashwin. I lead business development for 12. A little bit about us: we're a carbon transformation company, and we attempt to eliminate emissions from everyday products by transforming carbon dioxide into chemicals, materials, and fuels that make up our modern world. So one of those products is obviously Sustainable Aviation Fuel, which has become a very critical tool in aviation's roadmap towards net zero emissions by 2050. The process itself uses CO2 as a feedstock, and we combine it with water and large amounts of renewable energy as we transform the CO2. And it's done essentially in two main steps. One is the electrolysis itself at low temperatures, and then the second is a Fischer-Tropsch synthesis process. And there's three key elements that make this, that put us in the emerging advanced technologies bucket, and that makes us unique from the rest of the marketplace. Firstly, we use only biogenic CO2, which means that the CO2 is coming from cleaner sources like corn ethanol plants, pulp and paper factories, etc. Not some of the coal refineries, right? Secondly, the renewable power sources that we use have very low fossil content. So we only focus on hydropower, solar power, or wind power. And then finally, the hydrogen that we use in our processes as well is green hydrogen. So we do our own water electrolysis, right? So these three elements really give us a 90% reduction versus conventional fossil-based fuels. And moreover, the fuel is drop-in ready and ASTM certified. So our first production plant is being constructed in Washington State, which is in Moses Lake specifically, which is 3 hours east of Seattle-Tacoma Airport. And the first commercial demonstration flight will be powered by Alaska Airlines under a separate agreement. But it was a very easy decision for us to partner and extend our relationship with them for the SABA agreement as well. And then we'll have multiple future production sites that will produce some of the fuel for the SABA contract. So now touching on why is power to liquids advantageous, right? Number one, the feedstock that we use is carbon dioxide, and there's abundance of carbon dioxide, as we know. And some may argue that the removal of carbon dioxide from the atmosphere is key to actually achieving some of our decarbonization goals. Secondly, the power to liquids pathway has attractive economics over the long term, right? So as we embark on kind of the production curve, we face long-term cost advantages because we're signing long-term PPAs with energy companies. The cost of the general cost in the renewable energy sector is on a decline, and we can leverage economies of scale, material cost, etc. In this journey, right? Thirdly, we have a modular scale up, so we can increase the velocity of our production and our ramp up based on that modularization. And then finally, the infrastructure and land requirements that we have and water requirements are fairly lower versus some of the other pathways as well. So over the long term, these are some of the benefits that really are propelling us towards more production. And you'll hear a lot of folks say we need more production, right? And that's the key here. But to unlock the long-term value via the power to liquids pathway at a gigaton scale, we not only need customers, but we also need the right conditions. Specifically, there needs to be customers that are willing to sign bankable long-term agreements at higher volumes. And that helps producers like us raise money via equity and project financing. And then that money can be used to increase the production capacity, which then has a ripple effect into more offtake agreements as well. So oftentimes, the key to breaking this vicious circle is to have an aggregation of the demand, which is exactly what SABA has given us via this RFP process. And finally, I'll say that the big picture challenge here is that we're trying to take one of the most capital intensive undertakings in the history of humanity with high amounts of financial and technological risk. And we're trying to sell it to customers with the absolute lowest margin on the planet, right? Which is the airlines. So partnerships with corporate customers is absolutely crucial. And I really want to thank SABA for bringing all of the corporate customers together, aggregating the demand, and really accelerating this process towards decarbonization.
Thank you, Ashwin. We certainly would just echo those things back. Very excited to be in partnership with 12 on this RFP and looking forward to future work. It should be noted that the deliveries of PTL SAF from 12 are coming to SABA customers in partnership with Alaska Air. I'd love to now welcome Courtney Unruh from Alaska, who is the SAF and Sustainability Engagement Director. Hi, Courtney. Nice to see you. I'm hoping you can help us describe a little bit of the importance of advanced SAF technologies from an airline perspective, and how partnering with corporations like our SABA customers has helped to drive SAF purchase for you.
Yeah, absolutely. And thanks so much for having me. Excited to be here with Ashwin and the rest of you. So really quickly, for those that don't know a lot about Alaska, if you're not located in the U.S., we're the 5th largest U.S. airline. We're located on the west coast of the United States. We have 23,000 employees, and we're headquartered in Seattle, Washington. And so with our headquarters on the west coast, we serve a ton of guests, including corporate guests, that really, really care about sustainability. And so a few years ago, we set a path to be net zero by 2040, which is 10 years more ambitious than many other airlines. And so with the such thin margins that I won't belabor the point you've heard about, we're trying to find really creative ways to meet those goals 10 years in advance of many others. And so finding partners that we really believe in and that we can work side by side with, such as 12, especially in locations where we're located, is a huge piece of how we're planning to meet those goals. Like many other airlines, we've set a 5-part plan to get there, but the biggest part of our path to reaching net zero is SAF. And so we're expecting a large majority of our emissions reductions to come from SAF. And we are looking at all types of SAF. And so just to be transparent, we've purchased HEFA fuel. We're looking at Fischer-Tropsch fuel, alcohol-to-jet fuel, but we're also extremely excited about power-to-liquid fuel because of the emission reduction value that fuel can bring. And that's originally how we started partnering with 12, was because we just saw such great value in the power of power-to-liquid fuel in Washington. we're focused mostly on building this market. And so, like I said, we're purchasing from any and all SAF providers that can produce fuel at an affordable cost, fuel that's on spec, that's certified. And we've set a couple other sustainability criteria through working with SABA and others, like making sure that it's certified through either ISCC or RSB and reaches at least a 60% reduction. And so, as Ashwin kind of mentioned before, the main part of the deal with 12 and SABA that was super exciting for us was that we were able to aggregate demand for longer term. And so originally, when we partnered with 12, we weren't able to do that for a 10-year time period. And that's really what 12 needs to be able, and Adam mentioned it as well, like most fuel providers need to be able to get a bankable deal done with investors. And so that was extremely exciting for us, is that we got to partner with somebody that we really trust, we're already working with, we're already excited about. And now we have SABA next to us to be able to bring corporate customers to the table and join us. And we're really excited to see where this goes. I wanted to quickly just touch on next steps with 12. So Ashwin mentioned that we're excited to do a test flight here shortly. And so as 12 gets up and running, look out for that. Alaska is excited to be the first US airline to use their fuel. And then we're excited to continue supporting them in their new plants. So we know not all of their new facilities will be in Washington, but a lot of the fuel that comes from this deal will come from potentially new facilities, and these contracts are absolutely pivotal to be able to help them set up operations elsewhere.
Thank you. Thanks so much, Courtney. And as with the other speakers, because it just come off the hot mic, I'll just go straight into a question for you here. There's been a few in the Q&A. Wondering if you can help us understand the airline perspective on the kind of the potential contracting flow where a third party is already purchasing these Scope 3 certificates before the fuel's been produced, before an airline's even been found to receive the physical molecule. Is that how does that work with your strategies to actually procure fuel? Is that helpful? Do you see challenges there? Yeah, what is your take on that?
For us, that's challenging. We at Alaska have only purchased fuel to date that can physically be delivered to one of our hubs. And so it's challenging to not be included in the upfront negotiations of that fuel, because there's a ton of logistics to make sure that we can actually get the physical fuel to our locations at a price that can work for us. And so when we're only offered the Scope 1 portion of that fuel after all of the negotiations have been complete, that's really difficult for our operations. And so what works well for us is when we're brought in like this at the very beginning with the fuel provider to make sure that logistically and operationally the fuel can fit within our current operations.
Thanks, Courtney. And Ashwin, would love to ask you some questions on kind of the pathway here for scale up for 12 and PTL fuels. But just thinking there, I'm sure there are a number of barriers or opportunities. But I guess first question would be just in terms of timelines in this deal, what are the actual delivery dates that we're talking about? When are we expecting to see more physical volumes come online from your facilities, and what does that timeline look like?
Sure. So we've been very fortunate to be working with customers in general that understand that we're a pre-revenue company and that our production facilities will need a certain form of ramp up, right? So and I want to make sure that that's understood first. And so the initial volumes via this deal will be online by 2026. So we're expecting the first SABA delivery to go out late 2026 via this agreement. And then as we get our next facility online, which is roughly 2027, 2028, the volumes will ramp up automatically. So then we'll have 2 facilities producing fuels for the SABA agreement, right? And as Courtney pointed out as well, a lot of this is going to be physical fuel being delivered. So the blending, the logistics have to be looked at as well, depending on where we're producing and when we're delivering, right? So I think these factors come into play quite a bit when you're looking at the production rates as well, simply because we don't want to accelerate production too fast at the cost of value, right? So essentially that's going to be a key challenge for us to really balance the demand and the capacity at a very disciplined commercial rate.
And maybe one last one, Ashwin. Is modular scale-up technology a key advantage here in terms of your scale-up as well for 12?
Absolutely, it is. I think that's one of the elements that's really going to benefit us in the long term. So as I mentioned, we have basically electrolyzers that we're using to transform the carbon dioxide. And as you put these electrolyzers together, you create stacks, right? So at a given time, your land footprint or your electricity availability may be limited, right? So we set up our operations based on the CO2 feedstock, the electricity, and the land. And then 10 years from now, if there's additional electricity that's unlocked or additional land that's available, we're able to purchase that and leverage those assets to then add another module to the facility as well, right? So you can use those existing resources and then just keep building forward based on that, right? So I think that's a very key advantage, where you're not starting from scratch with your capex and with your project financing. You can just extend those out a bit further.
Thanks, Ashwin. Well, we've got a few minutes left, and we've got a few I think critical questions in the Q&A. So I'd love to invite our speakers back up to the virtual floor here. But maybe I'll start for one. I'll pass Andre's way, which was, there are a few questions in the Q&A, Andre, on concepts of additionality, or how do we provide those checks? So what is the SABA functionality for ensuring that these certificates are truly additional?
Right. That is a great question, Andrew, and it could potentially even be a topic of its own webinar. So in the very quick minutes that we have left over, in SABA, we think about this, we use a term called the atmospheric benefit principle, and you can read more about this in our sustainability framework that's available on the website that we'll show you at the end of this webinar. But fundamentally, what we want is for the customer investment to go towards CO2 reductions that wouldn't have occurred otherwise due to compliance obligations. So that's, I think, kind of the basic principle that we're building off of, because remember, companies are using these certificates to meet their corporate climate goals. They're making a big investment, and they want those investments to count towards real CO2 reduction. So things like the blending mandates that are beginning to ramp up in the EU are not compatible with our view of what should count towards a corporate climate target, because that SAF is required to be produced. So there's not really an additional atmospheric benefit that results from the corporate climate investment. So I do think the way that we check for that, there's a couple of elements. Number one, contractually, it's built into our standard template contract that the provider of the SAF certificate needs to disclose the full range of incentives and government programs that they're benefiting from. To be clear, we're okay with tax incentives and other financial incentives, and there's quite a few of those that do help drive down the cost premium, but the whole suite needs to be disclosed, and the registry has a functionality of that as well. So we can check to see whether or not the fuel is meeting our requirements for atmospheric benefit.
Thanks, Andre. I appreciate that. And we are coming up here quickly at the top of the hour, so we're going to have to wrap up shortly. But I did just want to take a moment to thank all of our speakers and presenters today. So Courtney, Ashwin, Andre, Adam, Dorothy, Claire, thank you so much for sharing some time and sharing some insights today. I think it's incredibly exciting, obviously, to have been working behind the scenes on these sorts of announcements and these sorts of procurement exercises, and to be able to go live and share more with the world. I would love to make sure that everyone is aware of how you can get in touch with SABA to find out more, and to start participating or see if we can answer any questions for you. So we've got contact details here. Please feel free to check out the SABA website, flysaba.org. You can find links to our sustainability framework, as well as our some additional information on policy and additionality. You can also check out our SAFc registry, where you can find a number of resources to help outline some of these more technical questions on registry operability, on rules of additionality, on LCA calculations, all sorts of wonderful things there. Or feel free to email our secretariat. Alex's email is listed there, or info@flysaba.org. I really appreciate everyone's time today on our webinar. We'll make sure to send out a link to this recording once it's been finalized and downloaded. I will just give a virtual round of applause and thank you to all of our presenters today and all of our participants listening in. So thanks so much, all.